Okay, good morning. Good morning, everyone. You're welcome to the class today. Yesterday, we had quite an impactful time, and today I know it's going to be another one. And let's see this trade. I did this analysis earlier to think, so you can see we are already in profit on boom 1000. Boom 1000, we are already in deep profit. We are already in deep profit. Okay, so how did I get this trade? How did I enter this trade? It was a falling wedge I saw. I saw a falling wedge, and I've been backtesting this falling wedge. I've backtested this falling wedge, and I discovered that it works. It really works. So it really works. It really works. Okay. It really works. So like I said, from the 4-hour time frame, this was what I did. I checked the starting and finishing point. I marked them together. All right, so you can see the market has actually been buying from here. I think this is 4 hours, so it's obviously buying from here. Okay, so the market is in a buy. Since on the 24th of May, I think it's quite a long time. So the market bought up to this point and it retraced. This retracement like this give a falling wedge. And the rule of a falling wedge is that the market must go to the opposite direction. All right. So that is the rule of the falling wedge. The market must go to the opposite direction. Once it is going to the opposite direction, all you need to do now is to join the higher high and the lower low together. Once you join them together, then you mark out your confluence point. That will be your TP. All right, as you can see, I'm seriously on this trade now, and the topic, the profit is massive already. Profit is massive. Profit is massive. Somebody is saying he cannot join. I don't know. Maybe it's network from your side because I've reshared the links how many times and still he cannot join. So what happened is once I mark it out, I now join. This is a support, all right? Remember when putting your trend line, it must have to touch the wick, not the body, all right? It must have to touch the wick and not the body. So once it touch the wick and the body, touch the wick, then you are likely to be right. Hello, can you hear me now? Good morning. Hello, can you hear me? Hello, Lucky, good morning. Can you hear me? Hello, sir. Can you hear me?
Yes.
All right. Good morning, sir.
Good morning, sir.
Thank you. How are you nice, sir?
Fine, sir. How is yours?
Thank God. Thank God. Thank God. Okay, so I was explaining something before because I'm on record. I'm recording it. So what I was saying was
Switch my
there.
Yes, I said so sorry. I just switched my network. Now it was the network.
Okay, okay, okay. There's no problem, no problem. So
Yes, sir. Sorry,
okay,
I'm recording the session. I
and the
recording the previous class we had,
okay,
but
okay, okay.
the,
Uh,
the voice
okay,
is
your network is bad.
not the audio is not playing.
All right, bro, Lucky. Thank you. I've heard it. Your network is bad actually. I didn't record that of the last class, the previous class, but I'm recording now. I'm currently recording. So I think after the class, I'll see to you. All right?
Hear me?
Yes, yes. So,
Yes,
like what
as we had, I recorded.
you say? What did you say? Can you hear
Can
me?
you hear me now, sir?
Yes, I can hear you now.
Yes, I can hear you. Yes, I
Okay,
said the
okay,
last class we had, I recorded it. The voice is not playing. It's just the video.
okay, okay. Now I'm recording it now. The voice will play.
Okay, sir.
Yes, I'm currently recording. So, um, from the previous class, we've done some basic stuff, like where I told you that the market moves in three directions, all right? Where I'm just trying to do a revision now. The market moves in an uptrend,
Yes,
right?
sir.
Okay, in an uptrend,
Yes,
then
sir.
in a ranging market and a downtrend, all right? And I was happy you were able to point that out. You're able to do the classwork, the homework I
Yes.
gave. You did it very well. All right, now also we say that the market in the advanced market structure, we all we need to look for is five. All right. First thing first, the things you need to look for are number one. The things you need to look for, number one, is things to look for in the advanced market structure. All right. In the advanced market structure, sorry, market structure. So all you need to look for are number one. Number one is a sweep of liquidity, right? A sweep of liquidity, sorry, of liquidity. Then number two, a break of structure, okay? A break of structure
Okay.
to the opposite direction. Yeah, a break of direction of structure to the opposite direction. Then number three,
Hello, sir.
a structure. Can you hear me? Can you hear me? Hello? Hello, can you hear me? Hello, Lucky. Hmm? Oh, Lucky is having network issue. Up to 50%. Then number four, market comeback.
Yes, sorry, the network disconnected. I just connect back now.
Okay, okay. Come back to take the liquidity and continue to iteration to iteration. All right. So these are four things you will look out for. Do you understand? Four things you look at for. Number
Yes.
one, a sweep of liquidity. A sweep of liquidity is what we other people call the order block. Some people call it order block. All right. So a sweep of liquidity is very
Okay.
simple. Yes, something like this. At this particular time, the market was going up. All right. So it came. This was the
Yes, sir.
initial liquidity. Okay, but the market swept it.
Yes.
So as soon as the market swept it, it continued going up to create a break of structure. This place now become a structure. All right. So market create the structure to the opposite direction. You know that here was a downtrend. So here is the opposite of down, isn't it?
Yes.
Yes. So the market create the break of structure to the opposite down. Then after creating the opposite direction, it came back to create structural liquidity up to 50%. Do you understand? Up to 50%. So it has to go back to create a second break of structure. It's very important. The second break of structure, that is what validates your analysis. The second break of structure, the market has to come back to take this initial liquidity, this one that was created. Market needs to come back and take it,
That's the structure.
continue its own direction. So this place now becomes your point of interest, like what we did in the last class. This place now becomes your point of interest. All right. So here is your break, is your sweep of liquidity. Can you hear me?
Yes, sir. I'm with you.
Oh, okay. Then here becomes your first break of structure to the opposite direction. So what validates that the market is going to go your way is this second break of structure. All right. From the math of 2 or 3,
Yes,
a word is established, right? So from this one now becomes a second break of structure. So the low before the last low, this is the low before this last low, isn't it? This is the low before this
yes,
last
sir.
low. So this one becomes your protected low. This one becomes your protected low. Then this one here becomes your structural liquidity that must be taken out. Right? So this point now, and this point is your A. Okay? This point is your A. Then this point is your B. B must always be taken out. B must always be taken out. Here is your
Taken
B.
out. Okay.
Yes, B must always be taken out. Then here is your C. C is where you are going to, right? C is where you are going to.
Okay.
Do you understand? So B is your enemy that must be
Okay.
taken out. All you need to do is to look for ways to ensure that your B is taken out. So if your B is taken out, then you now look for confirmation. Don't enter the trade blindly. You look for confirmation before you start going to the direction the market is going. All right. So these are the
Okay.
5 basic things you need to know. It is not something that is hard. It's not hard at all. All right. Excuse me. Let me
Okay,
open
sir.
my. All right. So it's not hard. All you need to do is to look out for these 5 things. Look out for these 5 things. Once you look out for it, if you can spot it out, then you have gotten an edge in the market. Do you understand? So
Okay.
first, you must understand there
Yes.
must be a sweep of liquidity, which is this. There must be a break of structure, which is this. A second break of structure. I did not put it there. Second break of structure, which is this. The market must retrace to give you a structural liquidity up to 50%. 50%. If this structural liquidity is here, if this structural liquidity now is here around this side there, you know it's not up to 50%, right?
Okay. Yes, sir.
Yes, it's not up to 50%. So it means this one now will have to be invalidated. It's not good. That means the market is not going to work out. Then that means there have to be a creation of engineered liquidity. Because your structural liquidity have to be close to your protected low and up to
Yes.
50%.
Okay.
Yes, at this point, it's not bad. This is up to 50%, almost half. Half from this side to this side here. This is almost the middle, isn't it?
Yes.
From here, to this side, this is the middle. So the market must give you a 50% retracement, which becomes your structural liquidity that must be taken out. Now, let me show you something. I entered a trade yesterday. I think I'm still on the trade on V90. On V90, V90 is very, very volatile. All right. V90 is very, very volatile. You can see I'm still on the trade. Can you see it now?
Yes.
Can you see it?
Yes.
Hello?
Yes, I can see it, sir.
Okay, okay, okay. Now, this strategy,
So this is downtrend, right?
yes, this is a
It's
downtrend. It
downtrend.
was a set. Yeah, this is a downtrend. Now, what I did was I went to my 4 hour time frame, right? This is another
Yes.
strategy I say I was going to teach you. This is another strategy I was going to teach you so that even if you cannot see, it's not all the time you see these 5 laws, right? So if you cannot see that 5 laws, you can use other strategy to enter the trade, right? So what I did first was to mark this is the beginning point, this is the end point, all right?
Fine.
So that means from here now,
Yeah.
this is uptrend from here, isn't it? The market is obviously
Yes.
an uptrend in the 4 hour time frame from this side here. Is an uptrend, all right? It's an uptrend.
Yes.
So, okay. So, sorry, let me remove this. All right. It's obviously an uptrend from this side. So when I marked it out, I now discovered that the market was coming to this side. I said, okay, since the market is coming to this side, then I cited this particular trend. All right. So this is a trend line. We call this thing falling wage and rising wage. This is another strategy I'm going to teach you after teaching you the advanced structure. So when I saw this thing, and I said, okay, I marked it out. I touched I marked the higher high and the lower low together. All right. Let me remove this so you see what I'm talking about. Let me remove it. Um, yeah, so that it will be clear for you. Okay. Now this is it. When I saw I marked this thing out. Here, the market, you can see that it's touching the head. All right. When marking
Yes.
your trend line, it has to touch the wick, not the body. It has to touch the wick. So when I marked it out, I now said, okay, now this is what is going to happen. Then the market has not actually touched this side. The market has not touched this side. So the market was here when I did the analysis. It was here. It was going up. It was around this side here. So and that's okay. And the trend line principle state that the candle must touch the line 3 times, right? To
Okay.
become valid, it
Yes.
must touch it 3 times. So this is the first time, this is the second time. So this must have to be the third time. So and the market was here, and that's okay. Then I place my pending order here, my sell limit here. I place my sell limit here. I say, okay, whatever happens, the market is going to sell from that side. Let's go to the 30 minutes. I say, whatever happens,
Okay.
the market is going to sell from that side. So what I did was to set my pending order here. I set my pending order at this particular point here, right? I,
Yes, sir.
I, I put it here, all right? So I now say I was even actually targeting this side. I was targeting this side here. I say if the market come here, I will close. You can see that the market actually entered my way, but went even beyond my expectation. Do you understand? So
Yes.
this is it. Once you understand this thing, it will be very easy for you. It will be very, very easy for you. All right. Now, there's another trade also that
Yes.
I took. Do you have any question?
Sorry, sir. Based on this strategy,
Yes.
as you do not close you put where the trade is going to take you out or how, or you just leave it like this, it will continue to make profit.
Okay. Now, you know that you normally, to avoid being taken out, you need to set your stop loss. All right. Your stop
Okay.
loss means
Yes, sir.
if the market start going against you, it will just take you out. All right.
Okay.
Let
And you
me
make
let me show you. Okay, let me show you on this side now. Now I took this trade yesterday. I took this trade yesterday. Currently it's still on the trade, but I went out this side here, this particular side, because of this fair value gap. I was thinking it was going to retrace back. So I went out here. Now, your stop loss is if since you have known that the market is going your way, all right? This particular side, now you
yes.
set your stop loss here. This side, you set your stop loss here, such that if the market, go retrace back, instead of the market to go your way like this, eh? And the market start going against you. So let's say at this side now, you are losing $10. All right. Maybe your SL, you just say, okay, I'm going to risk $10 in this trade, such that if the market goes against me, I will have to exit the market. You just take me out to minimize loss. Do you understand? So you risk $10. This side, you risk $10. But if the market did not go your way, all right, and continue going, I mean, if the market did not go against you and continue going your way, all you need to do is to adjust your stop loss. So your stop loss that was here before, you bring it down to this side here. This is what we call to take to scale in. All right. So at this point, you can just put your stop loss here, or you break even. You can call it break even. If you want to break even, you can put it at your entry point here. That is break even, such that if the market goes against you, you will not lose any money. You will not lose any money.
Okay.
It is just the money you have made from the trade that will go. You will not lose anything from your capital. So when the market has come to this side, you can put your stop loss here, such that whatever, if the market decides to go back up, you must have maximized some profit before going out. Do you understand now?
Okay.
Yes.
Yes, sir. But it's a
So
kind of a confusing.
you say,
Yes, I am trying to get it to get the strategy now.
oh,
So you say
okay.
if I not put stop loss or if I put it
You,
at my entry level now, if
yeah,
it does not go against me, or if it goes against me now, it means the money, my capital is not going to be tempered with,
yes.
just the money I made in the trade.
Just the money you made in the trade. Like here now, this was where it was a pending order. This is sniper entry because of this liquidity that was there. This is a liquidity pool from this side. You see that they try to break. This is a strong a resistance, right? There's a strong resistance here that the market has been trying to break up but couldn't. It tried how many times it couldn't. It came here, it couldn't. So and that's okay, since it could not break this thing up, so and the market is coming up like this, then if it comes to this particular side, it will still not be able to break it. So I put my pending order here. So my stop loss was here. I say in case the market breaks it and want to go up, so at least I'm going to lose $10. I say it's not a challenge. So I put it there. Then I discovered that the market did not actually go up. It respected my analysis. It started coming down. So when it reached to some certain point, I discovered that at least I'm almost $50. I now put my SL at my entry point such that if the market decides to go back up, I will only lose that $50 that I made, but my capital initially will not be tempered because that is my starting point. It will just take out the profit I made, but it will not touch my capital. But when the market was going down, continue going down, I have to start scaling in. All right, because I was afraid because there's a fair value gap here and there is a strong support here. Do you understand? There's a strong support here.
Yes.
So I thought you see that the market reacted to it. When it was reacting, as it started going up, like I said, Kai, let me close this trade. I have to close the trade. Do you understand? So if I leave my TP on, hmm, let's say I set my TP
Yes.
here like this, and the TP from this side here to this side here is $200. And I only set my SL. My SL is here, and I leave my TP to this side. So if the market come to this side here, it will take me out. I will have gotten my $200 and gone out of the market. But you see that the market went up and is still coming down now. So that means I must have still be in the trade. Do you understand? Do you understand, sir?
Yes, sir.
All right, all right. So that is how it is. So what made me to enter this trade was because of this liquidity pool. I saw
Sir?
a what made me enter the trade was because of this liquidity pool here. The liquidity pool here. So I
Okay.
saw it that it becomes a resistance. So the market went down. So this place become the ceiling. I will call it a ceiling. That the market cannot just jump out. It tried to break out, but the roof could not. It tried to break out, the roof could not. So when it went enter here, and I say it's going to sell, and I put my pending order there, and I enter the trade. Do you understand now? So it is simple. So if you can have an idea on what the market is doing, it will be to your own advantage. It will be to your own advantage. Now, your network is really bad. Let me show you another trade that I'm currently in. Another trade I'm currently in. This is Boom 1000. Boom 1000. Since I'm recording it, I'll send it to you. So this strategy is called the falling wedge. The principle of falling wedge is that when you notice a falling wedge after matching the higher high and the lower low together, all right, and the lower high and the lower low together, it means the market is going to buy. It must go in the opposite direction. Now, the first thing I did here on the 4 hour time frame, I marked in here. There's a double button here. There's a double button that is double low, and here becomes the neckline. It means the market is going to buy. The market has been buying up. When it bought this side, he started retracing, coming back, creating a lower high, a lower low, lower high, lower low, which signifies a downtrend. And this downtrend is what we call a retracement, a temporal retracement. So I now link the lower high together and the lower low together. When I linked it together and I discovered that this now touched the trend line three times. So it must have to start going up now. So the market start going up. Let me go to the 30 minutes time frame. All right, on our 30 minutes time frame, you could see it very well that we are actually in a very big profit. Oh, the network is really bad, bro. The network is really bad. The network is really bad. Okay, so you could see that I'm seriously in a profit. Seriously in a profit now. Um, okay, I've actually stopped sharing my screenshot. I've stopped sharing my screenshot. So you can see that the market is going up. It will go up until it reach this confluence point because the market will react to this point. So I'm going to leave this trade till it reach this side.
Hello.
Yes. Can you hear me now? Your network is
Hello,
really
sir.
bad.
Can you?
Yes, I can hear you.
Yes, I said. Yes, I said I've not been hearing all this while the network is not.
Okay, okay, okay. Okay, your network is really bad. What is happening in Sokoto now?
Yes.
Yeah,
Well,
was it because of
since
the rain that
yesterday,
fell
and I
yesterday?
even thank God my so maybe because of the rain. Because I even thank God that this my company is a little network than other place.
Okay, okay. Is well. So
Yes,
you can see that I entered this trade this morning, just this morning. I think about 2 hours ago.
okay.
Yes, about 2 hours ago. How did I enter this trade? I entered this trade, this thing you are seeing here. I'm showing you three strategies now. I don't want to rush you, all right? But I'm going to teach you all of them yet. Now, this is what we call a falling wedge. A falling wedge. How is it a falling wedge? Now, um, I think I will need to draft a timetable for this so that I will not be missing any, I will not be rushing myself. Okay. So,
Okay.
yes. Now, what I did first was I came to 4 hour time frame. You must know that your 4 hour, your higher time frame, market respect higher time frame more than lower time frame. Do you understand? All these things here are your time frame. Look at them. We have 1 minute. Some people trade 1 minute because we call them scalpers. You have 2 minutes, you have 3 minutes, 5 minutes, 10 minutes, 15, up to 24 hours. We even have monthly time frame, but you cannot see it here on the rate. You can only see them on that is on currency pairs. All right. So that you
Okay.
see what the market is doing before now, because market really uh, respect the higher time frame. So I went to my 4 hour time frame and I discovered that the market was selling. Can you see it now? The market was selling.
Yes.
But at this point, I marked
I-
a double button here. All right. I spotted a double button here. The principle of double button is the market is going to buy. That is, the market is going to buy. Look at the market touch here. It went up, it still came back to create a double button. So here now becomes the neckline. Do you understand? This place.
Sorry, sir. That double bottom. Can you zoom it a bit? Sorry.
Okay, I'm coming. I'll zoom in so you see it. Let me mark this thing. This place now becomes the neckline. Now this is the double button. Can you see it now? All right.
Okay.
Yes, this is a double
Yes.
button here and here. See that the market came, it
So
put
that
one
means
leg,
the lower low and the
this
both
and this
the
one, they
two
are
lower low
equal.
are on the same level.
Yes, they are equal.
Okay.
So once they are equal, that means they are balanced. The market want to push up. The market want to push up. That is what it's indicating. So when you see it like that, you can also as well see it in the uptrend. That means we call it a double top. When it is in the downtrend, it is called double bottom. You understand? So if the lower lows are equal, that is a double bottom. All you need to do is to mark the neckline. This place, look at it. This place here is the neckline. So since this place is the neckline, here like this is the neckline. So that means the market will have to break it out. After the market break it out, it will retrace and touch it back like this. It will retrace. If the market is going to go up like this, all right. After going up, it will come back, touch it, then continue going up. Do you understand? That is what the market will do.
Yes.
So you have two ways to enter the trade, right? You can enter the trade
So
immediately
this
you
green,
spot.
this green. Sorry, sir. So the
Okay,
analysis now is based on this green you draw. The second one at the offside, it must
this one.
touch it. The market must come back and touch it. Yes, and continue
Yes,
or how?
yes. If we go to the let's go to 15 minutes time frame, you will see that the market touch it. Let's go back and see now.
Okay.
Yes, let's go back and see. You see that the market touch it. Where is it? Come, let me bring it out.
Okay.
Okay. All right. Now this is boom and crash. All right. So the market push up. It pushed up. So it did not actually come back to retrace it. But normally that is the principle. Oh, we're running.
Okay.
Yes, my time is going. No, the thing is just 30 minutes. All right. So the thing
Okay.
is 30 minutes. You're going to cut it and come back again. We just have 9 minutes left. Yes. So
Okay.
remaining minute time is 9 minutes left. So let me try and hasten the time. So the market must come back and retrace it, then retest it, then going and start going back up. But since this is a boom and crash, that means the market, we can one candlestick can give you up to how many dollars at the same time, because it will spike up and spike down at any time. So when I notice it, after I notice it and I say okay, so what I did was I discovered that the market now, let's go back to 4 hour time frame. I believe you understand what I'm doing
Okay.
here.
Yes, I'm getting it.
Okay. So when I saw the double bottom, I marked this side. Then I discovered that the market create this higher high here because it took out this one. So and it started selling, creating lower low and lower high, lower low, lower high. I now use my trend line to mark it, touching the wick, not the body. And I mark this side. Because this temporal retracement, the market is just retracing. So when I discover the market has touched here, 1, 2, 3, and here the market has touched here, 1, 2, 3, and I say, no, this thing is going to buy because the principle, we call this now, the whole of this side now, this retracement, we
Yes.
call it a falling wedge. We call it
Yes, so
falling,
you say you're going to buy and sell or buy
it's going to buy.
because I can see it's going down. So
Yeah, look at it's buying currently. As you can see, it's buying currently here. All right,
okay,
it's buying. So we call this a falling wedge.
okay,
Yes, we call it a falling wedge. So the principle of falling wedge is the market will buy. Once you see it coming down like this, draw your trend line, draw this trend line. This is more like something is falling, isn't it?
yes,
So that means the market is going to buy. As you can see, I'm in deep profit, very, 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 very much deep profit. Look at I entered the trade from here because I don't want to wait till the market goes up. I just enter the trade immediately. And you can see I'm in deep profit already. You can see it from here, right? Because immediately the market broke out. You can see it's going up and it's going to go up until it reach this side here. This will be my first take profit. Here like this become my first take profit. Then here become my second take profit if I'm able to hold it to that point because this is 4 hour time frame.
okay,
Yes. So now what happened here is this is risk. The risk reward is 3:45. That means if I risk $3 in this, I'm going to make $45.
wow,
Yes. And I did not just enter one position. So that means let's assume if I enter three position and that three position is $9. That means I'm going to get 45 times 3. 45 times 3 will give you almost 100 and something dollars. So that
yes.
is what is happening here. Do you understand? Just
So
this morning.
yes, so actually, I was thinking since the trend line now is going
Mm,
down.
yes.
Yes, the market is going down. So I was thinking what you are going to do is to continue to go down. But based on this strategy, I noticed like when it is going down, it draw this three line and the 3 weeks uh, touch the lines we draw now.
Yes.
So it means it will go up. Agree?
Yes. Yes. Now look at it here.
Okay.
You link the candlestick. Look at, you see that it's touching the line here, right?
Yes.
Did
Yes.
you see it here? It touch it here,
Yes.
it touch it here, and it touch it here. This is the third time. So when you notice it like this one is just a retracement. We call it a temporal retracement. So the market will have to continue going up. We call it a falling wedge. This is not necessarily a sell trend. This is just a retracement. Like if you are climbing ladder now and you discover that you need to put your leg in one particular stuff to gain ground before pushing up. We have 4 minutes left. So I'll have to do this, then I will send the link for you again. So we'll just start. Right? So we just have 4 minutes left.
Okay.
So yes, that is what this market did now. The market is trying to put his leg on, on a solid ground. Now, where did he put his leg? It is on this fair value gap here. Can you see the fair value gap?
Okay.
Here like this.
Yes.
That is where the market put the leg. It put the leg because if you don't put your leg on a strong support stuff, you will fall down as you are climbing up, right? So this is where the market put the leg. There's a fair value gap here, the market put it here. So had it been I came online on time and I noticed it, I would have entered the trade from here. Do you
Okay.
understand? Yes. So
Yes.
since I came late, but I still saw the opportunity, I have to maximize it. So I'm going to hold this trade at least. Let me get like $200 from it. All right. So that is it.
Okay.
Yeah, as soon as we just spot this stuff like this from this side, you're noticing that the market is just giving a retracement. This is not necessarily a buy, but it's just a retracement, a pullback to continue going up. That is what is happening here.
Okay.
So a falling wedge says that the market is going to sell. Let me write it for you.
Okay.
A falling wedge state that, oh, sorry, a falling wedge state that the market, what did I write?
Okay.
Okay, state that the market is going to
Okay.
buy.
Okay. Well,
Yes. So a falling
just
wedge
going up
state
because
that the market is going to buy.
the market.
Now this is a falling
Well,
wedge, a falling wedge like this. So let me draw it for you so that you understand what I'm talking about. Now this is it. Okay, I'm coming. All right. This is a falling wedge. Um, you have a lower high, lower low, a lower high, a lower low, a lower high, a lower low, isn't it? So
yes, sir.
all you need to do now is to, this is a falling wedge. Why the market was coming from here? The market was coming from here. Do you see now?
Yes, sir.
Yes, the market was coming from the downtrend. From it is an uptrend. It just retraced down. So since it retraced down, it then shows that the 6 gig. I just bought 6 gig though, and it's remaining 2 gig now. connecting,
Almost.
connecting. I'm telling you, connecting data to system is somehow it can
But
drain
I
data.
did on your. I think there's something that is on the system like that. Is it under the settings
Yes, that
your
is it.
Wi-Fi?
To off your this thing, your automatic update.
Yes, and I
Yes.
think there is another thing Lawrence on for me one day like that. I think under the Wi-Fi you go to is it something I don't know, I cannot remember. You on it.
Yeah,
So it's like it used to manage data. If not,
I tell you, my 8 gig
yeah,
yesterday
maybe if I check
finished.
my system, if I remember, I will just let you know so that you will take it anytime you want to connect you on it.
There's no problem.
Yes, sir.
So this is it. So this is a falling wedge. All right. This is a falling wedge. The
Yes,
market was going up. The market was going up. It just retraced down. So once you spot it, it means the market will have to still continue buying up. This is what a falling wedge is all about. All right.
okay,
So we have less than one
yes,
minute
sir.
left. So since my data is almost, maybe if I get another data, we can still continue, right?
Okay, sir.
Yes, I'm
Is
going to
it
send a
going to be
video.
now?
Eh?